So we have about 18 participants, and let people join as they get time. We will get started, right? So thanks one and all for joining the session. Today we will be discussing what is Fibonacci's anchor suppress points, and this is something that I have come up with my own study. There are no existing materials. Probably there is some concept called confluence that is pretty common, but then how do you enhance that concept and then make something more realistic for our intraday setups is something that we will be learning today. And apart from that, there are a lot of ideas that we can share collectively. And also people wanted to know what is the entry point and how do I trail some stop loss and what should be the levels that we can expect and whether it is going to reverse or it is going to okay, fine. There are more requests for joining. One moment. Right. So we will be exploring all these things. And in general, if you have any questions, that also we can, have some discussion around. And with respect to this FASP, I'll be like talking most of the time. And in case if somebody wants to share or add value, like, sir, along with this, we can also try something else. You have some sort of creative solutions that will help the larger group. Please feel free to share because here I am also there to learn. And it's not going to be a one-way communication. It's going to be mutual learning. And I am looking forward to learn from you all as well. So let's get started. How this next 90 minutes is going to be, I will give you a quick intro. We will talk about what is the Fibonacci series and why is it so important? How does it matters in stock market or any sort of markets that you play, what sort of impact it has, why should we even consider Fibonacci, right? That's something we will explore. And I have kept it like only about 9 slides because as we are going to interact, I'm going to add more slides to it in live session. So there are certain ground rules which I wanted to capture as I am explaining it to you, and because that way you will be able to retain most of it. If I have already typed in all the bullet points and then showed you, it will only be like, attending some sort of, boring presentation. Rather, I wanted to do it live. So it remains flexible. By the time I do it, I might also come to share a lot of details that I might not capture while doing these pointers offline. So that's the agenda. So let's get started. Any questions so far? Please feel free. Otherwise, give a thumbs up. All right, that's cool. Let's keep moving. So, what is Fibonacci? Fibonacci is a series of numbers that was introduced by Leonardo Fibonacci in the year 1170 AD. It is also called as Leonardo of Pisa because that's the place where he was born. It all started as a thought experiment of a rabbit, reproducing, 2 rabbits reproducing a set of rabbits, a pair of rabbits in a month, and then next month, those 2 rabbits are reproducing again one pair each. Then what will happen by the end of an year? That's something that was started as a thought experiment. And to find that, Fibonacci took this as a challenge and then came up with a formula that helps to find out what would be the number at the end of a year. So instead of doing it manually, like you just apply okay, first month this and second month this, there is no Excel sheet on those times, right? And you have to come up with the number, and it became very big challenge. Suppose if it is not 2 years, if it is for 5 years, then what would be the number of rabbits that would have been produced? You really have to go through a very big task of finding it, right? So Fibonacci came with a formula, very nice formula that helped to solve this problem. And okay, that's not everything. Even before Fibonacci, this kind of calculations were done in Indian history, and it dates back as early as 300 BC. So this is something you should keep in mind to know the context of what Fibonacci is. All right, and for now, there are thousands of videos on Fibonacci. There is nice experiments done, live examples shown. I would like you to go through some of the YouTube content to gain more insights about what Fibonacci is and what sort of beauty it is. I would invite you to go further and dwell deeper into that. Because this session's purpose is to apply this Fibonacci series into our trading setup. So I would not be spending too much time on what Fibonacci is and then going into the details and history of it, but this is the gist of it. All right, now if you see, this is called a Fibonacci spiral. What does it say? It says that, let's say this is 1 unit by 1 unit. All right, and then if you add this 1 unit with another unit of equal size, then you get 2 units of 2 unit, like 1, 2, 3, 4. You see, 2 of 2. Then you add these two things, 1 plus 2, then you get 3 by 3, right? And then you add this last 2. So Fibonacci series is adding the preceding 2 numbers and then getting the subsequent set. For example, if I have to know what is the next one in the series, then I should add the last 2, 3 and 2. So that is 5. So it becomes 5 cross 5 matrix. Then if I add the preceding 2, now the preceding 2 is 5 and 3 and 8. So likewise, it goes on to expand. And as it expands, you need to connect, let's say, the dots and then move further, like 1, and then I'm going with touching the second one here, and then the third one here, and then the 5th one here, and the 8th one here. So it makes a spiral, right? This is called a Fibonacci spiral. And the beauty of this spiral is it is found in nature, and it is so surprising that you will be amazed how this works in nature. Like, you look at all these things, it starts off with the center, and then it expands spirally, and you can see the pine tree seeds also, like it expands. And how it is expanding, in the center it is only 1, around that it is 2, and around that it is 3, and around that it is 8, then it keeps on expanding. So likewise, you see any snail, any sort of, even the Milky Way galaxy itself is designed in such a way that the core, there is only 1 central point, then around that there is 2, then around that there is 3 and 5, and so on. So this is such a beautiful thing that exists in the nature. So people have decoded the mystery of this spiral, and then tried to apply in various forms in the field of science, in the field of engineering, in the field of arts, and the results were like phenomenal. Like, you remember the painting of the Last Supper, that is designed exactly using Fibonacci series, and the beauty of Mona Lisa is also based on Fibonacci series, and there are a lot of great artwork and engineering work based on Fibonacci spiral. Yeah. So if such a small thing exists in many different forms in nature, can it be translated into the kind of profession that we are into? Probably you are a trader. Then how does it matter in trading? How does this series matter in a trading? Something that we will be exploring. And at this point, any questions? Please feel free. Let me quickly check. Okay, good. All right. Yeah, thanks. Perfect. Let's move on. So how does this play out? Let's see. Fibonacci sequences arrived by so this is the Fibonacci sequence. Let's understand. Starts with 0, 1, and then you have these two numbers. Now you add these two, it becomes 1. Then this and this becomes the preceding numbers. Then you add this, you get 2. Then you add this 2, you get the next one. Likewise, you get the subsequent set, and this is called a Fibonacci sequence, right? So what is special about Fibonacci sequences? As you move further into the sequence, let's say that you cross number 3. Afterwards, as you progress further, there is an interesting thing that you will be observing. For example, you add the two numbers and divide it by the higher value, then you get a golden ratio. What does that mean? Let's understand. Higher value. Let's say I want to add 5 and 8, right? So what is it? It is 13. Then what is the higher value of between these two? 8. So 13 by 8 is equal to higher value by lower value. Sorry, this is lower value B. One second. So this is lower value B. Right? So you get something called golden ratio. So what is this golden ratio? This golden ratio is this value, 1.618. All right? So this is called the golden ratio. Now you can take any number in this series after 3, and you will find almost every every calculation that you do leads to 1.618. That's something very amazing, because it means that irrespective of the numbers that's going to come, even if you extend this by about 100 or 1,000 or even 10,000, and then add the subsequent numbers and then divide it by the higher value, then you get this ratio. Say any number for that matter. It's not necessarily limited to this range. You can extend it further any level and then add it and divide it by the higher value. Then you get higher value divided by lower value, and this is equal to this, and this is equal to 1.618. You can do this experiment at your own pace. Maybe you wanted to add 89 and 144 and then divide it by 144 and see what is the value that you get by dividing 144 by 89, and it should be equal to 1.618. Does that make sense? Is that clear? Sudhakar, you have some questions? Okay, that's great. All right. Thanks for the feedback. Let's move forward. So why is it important in trading? Because it reveals the secret of nature. We don't know, we don't understand nature. We see nature, we enjoy nature, but nature has its own secrets. And this is one step closer in understanding nature mathematically, right? So that is one reason why you should know Fibonacci sequence in trading, because if something exists in nature, which is numerical in nature, then it should also have some relevance in stock market, which obviously deals with numbers, right? So that is one reason why you should know Fibonacci sequence. And everything in life is about ebb and flow. I'm sure a lot of you might have heard this phrase, ebb and flow. What goes up has to come down, what goes down has to come up. So it's not a linear road. If something has gone up, it has to come down someday. If something has gone down, and it has to come up someday. So it's like the growth and decay, right? Similarly, stock market and any sort of market that you play in, it's not linear. It's not like if it is going up, it is going to go up continuously. At some point, it has to come down. So using Fibonacci series, can we actually predict how much it can come down? That's a very interesting thing. We have a lot of data. We are using so many tools. We are using algo systems for our trade setups. And we are also taking a lot of help from OI, data interpretation, and so on. Many tools are there right now to analyze data. But beyond data, can we get more clues from the very nature of how things grow, right? If some, like say Bank Nifty was trading around 32,000, like several months back, then it reached 35,000, we felt that it is peak. Then it reached 38,000, we felt it is peak. Then it reached 40,000, we felt it reached peak. Then it became 42, and then we said that, yeah, this is it, it's going to come down. And then now it went all the way up to 44. And since it has rallied so much, can we actually predict if it is going to go down, how much will it go? So there is a bigger revelation. Apart from just the data, like people have created positions, writers have initiated strong positions, all these things are great. But without all those data, can we also predict how much it can come down is a very critical question. So Fibonacci actually comes handy in that, and that's exactly what we are using in our trade setup. Yes, we have a lot of indicators. We are using super trends, probably VWAP, volume, RSI, so many factors and indicators that we use, but still, can we actually guess till where I can expect it to fall or rise? That's the big question. And Fibonacci comes handy in answering that question, right? Any questions? Okay, that's great. A couple of more responses we will wait. Okay, cool. Fantastic. Am I rushing too fast, or is this space fine? Okay, cool. Let's move on. So, like I said, Fibonacci sequence in stock market or trading, we can use it as ebb and flow, right? At some point, we feel that the market is rallying up. Yes, we feel very optimistic about it. And then as it just, reaches its peak and then starts to come down, we immediately start feeling the fear. And then it drags and comes all the way down. And then we feel that, oh, this is the low, we should buy. Then it's, and then when we give hope, and then it suddenly starts to rise up. So this is a cycle, and this is where the psychology also plays a lot of, significant part in how this ebb and flow is formed. We say that it is a ebb and flow, but how this ebb and flow is, happening? It's happening because of people's emotion. So yes, data may suggest something. We have some strong trade setup. We might have best of the tools, but ultimately, what drives the market is the sentiments, the fears, and the greed. Okay, these are the things that drives the market. So data can be only abstract. It can only show certain certain aspects of the sentiments, but to understand the sentiment itself, we need much more higher order tool to support us, and that's where Fibonacci steps in and helps us and identify that, right? If the market enters into panic, how much further it can fall, that's something we can figure out with Fibonacci. And this is one example of how Fibonacci works. See, the market has rallied up, and then it reached a peak, and then it started to fall. Then some people might have thought, yeah, this is the end of it. It might rally up again. But then it climbed up and then it fell. Then here at this point, you see there was some buying. Again, it fell. And then people would have felt that, yeah, it could go further down, but then it rallied up and then came down. So you see, it's like a wave. It's going up and down. It's going up and down. You cannot really have one linear straight path in market. It will be always a wave sort of thing. What goes up has to come down, and what came down has to go up, right? It repeats. So with that, we are going to get into live demonstration of FASP levels, how we can draw. Yeah. That is all the presentation. I don't want to really go too much with the theoretical part. I want to quickly get into the actual demonstration of how to do this. So please feel free to ask any questions you have at this point. Do we have any questions? Just the basics you should know. These are the essential basics that you should know. So I'm just opening TradingView in the meantime to demonstrate. Let me create a new one. Right. I think we are all good to go now. Let's start off. I'm going to share my screen. Yeah. Are you able to see my screen? Yeah. Right. Okay. Thanks. We got the confirmation. So how do we go about this? Let me clear up the chart once again. I don't want to really use this one. This is my main analysis. I don't want to touch these. Intraday Fib levels. I think yeah, I think we can delete this. We can do is to use Bank Nifty. Yeah. So I'm even going to stop this, right? Now, look at this. We have, like I said, the market is ebb and wave flow. Like it went up, came down, went up, came down, up, down. And then it was going like a wave, right? And then it had a deeper fall. Please, someone has unmuted. Please mute. Yeah, right. So there is a lot of movement, right? And how do we draw Fibonacci? It's a very interesting thing. We might have a lot of indicators. That is your trade setup. I'm not going to talk about what your trade setup is. Rather, all I'm interested in talking about is to find the levels till which something can go up or come down, right? That is our interest. And how do we find that? We have a tool here called Fibonacci. Here you see these bars on the left side. This is called Fibonacci. And there are two indicators in which we are going to learn. One is the retracement tool and another one is an extension tool, right? So for these two tools to be applied, there are certain conditions. Yeah. So what I would like to do now is to bring in this one and then say, I wanted to introduce a new slide. Oh, goodness. Maybe I can copy this. Put it here. All right. Yeah. So what are the conditions? Some things that we should keep in mind is, let's talk about first the retracement tool. See, please do remember, there are countless number of videos online on YouTube, which talks about drawing the retracement levels and then extension, how to draw and all. But they all make a very basic mistake. The starting point and the ending point that they do might look same, but it is only one way is right, the other way is wrong. And I will also explain why only one way is right. Okay. I'm going to just write down the conditions here. The condition is always, okay, always start from right to left in drawing. Okay, this is the first thing you should remember. Always. Okay, what do I mean by that? Let's flip it and go to this one, and let's say I wanted to draw a fib level for this. Say the market has reached almost a low here at this point, then it reached till here, right? Or you can say first level it went here, right? Then we had a small correction, then from there it rallied up again from here. Now, what sort of information does it talk? If you are just drawing a trend line, it is just looking like a line. It really doesn't give us much detail. But Fibonacci retracement tool is something that will help us. If something has rallied from here to here, how much can it fall, and what should be the levels that you can expect it to fall? That's something only Fib can reveal. Okay, so Fib helps in decoding a lot of mysteries about the flow. Right. So let's get started. This line indicates Fib retracement. We are going to use this tool first, right? Now, okay, it has 2 points. To draw a Fibonacci retracement, you need 2 points. So one is the starting point and the ending point. A lot of people, what they do is they just go to the base of it. Of all this one, the recent swing you need to take. This is the recent swing. For this, what was the last swing? This was the last swing, major swing. Here is where it all started, right? Here also there was a swing, but this is not to be considered. The very last bottom of it you need to catch. And then let's say you draw from here till here. Okay, now have I drawn it correctly? I need to check it, right? So all I need to do is to zoom in as much as I can. And from where should I draw? I should draw from the, see that these are all wicks. That's why we are zooming in so much, right? This is all like long wicks. We should not take that wick. We should go to the body of the base of the body, right? So this is where it all started. And then it goes all the way up to here. And here again, if you see, we have just missed it. So we should get it to this level, right? But there is a problem with this. A lot of people show on YouTube to draw the fib level like this, right? Here again, you see, I was drawing to the body, not to the wick. Okay, I just ignored the long wick, rather I went to the body, right? So you need to draw it from body of the base to the body of the top, right? Now, this is what you will find in YouTube, and this is absolutely wrong, okay? Why it is wrong? Because your reference point starts from the base, from the past. Now, if I have to analyze, I have to draw everything from here, and it becomes very difficult for me to draw what, because when market opens today, I need to refer to the point from where it all started. It all started from here, but why do I have to go back all the way here to find what's going to happen in the present? If I have to draw some extension lines and all, then going from here will become extremely complicated. So the first rule is go to the top of it, right? And then start from the right side, just zoom in, start from the right side. See, here is where you had a fall, and then let's keep from here, right? Now I want to drag it backwards, then extend this till where? Let's say this is where the point of reversal happened, okay? So to give you a complete view, now you see, we can, yeah, we have the full picture. This is the peak it reached. This is the base from which it started, right? Is that clear? Okay. Now, you see, when you have drawn, the referral point will be mentioned as 0. I don't know if it is very clear to you all. Let me zoom in and show. Yeah, you see the referral point is 0, right? And then the last point that we have drawn is 1. So it is binary in nature, 0 and 1. Here it became 1. The base of it became 1. Now, what does it say? It says that if something has rallied up like this, there are certain points that you should keep in mind. They divide the golden ratio. Golden ratio is 618. That is called the golden ratio, right? The Fibonacci sequence, that very special number, that phi is called the golden ratio. That golden ratio is 61.8%. If something has rallied up, then it can fall up to 61.8%. That's what it means. But not always the market will fall to that level. So the further, there are certain levels that you should keep in mind. First, there will be 23%, then there is 38%, and then there is 50%, and then there is 61%. So you see, this is 23%, 38%, 50%, and 0.68. Now, look at the retracement. What happened? It went up, it fell, and reached 23%. Usually, 23% should be ignored. But for intraday purpose, this level we should keep in mind, because 23% itself is a huge reversal, and we should not ignore that. Sometimes on a range bound market, I use this 23% also, because there are no moves. You cannot expect the market to move so volatile, and then we cannot really trade. If you ignore this 23%, we cannot really trade. So I keep that also into the setting. And then you see it breached 38%. So the first level of fall that you can expect on a short term is to reach here. Then it almost reached 50%, and then it took a reversal, right? Then now, shall we put down these lessons into the conditions here? Yeah, you need to always start off with left to right. Ignore the wick and draw from the top of the body to till the bottom of the body. Yeah, so this is to be kept in mind. Now, I will add one more thing. It might slightly, confuse, but then let me take some time to explain it. Now, this is only the first step. You are going to the peak of it, you are going to the bottom of it. But then, should we really draw till here? If you ask me, should we really draw till here? I'll explain the second condition now. So it reached here, then what happened? The market came down, then it reached here, where actually the fall started happening, and where it was see, here it came, but then it is not even a retracement. It again went back. So this is to be ignored. You should go to the place where it got confirmed, where the downtrend started to confirm. And if I go to that point, then I should go to this red candle here. This red candle, if I zoom in and show you, you see, this is the peak of it. I should keep it till here. From here, the fall was really, really good, and then it never came back to this level ever. But if I draw from here, from here, it went and then it came up again. So this is to be ignored. You had a fall and then there was a retracement and then it fell completely. So this is the point I should keep in mind. Yeah. Similarly, I go down, or since it's very long data, I will just zoom out. Here, again, if you zoom in and see, it went up, but then it came down, went up, again it came down, and then the actual rally started here, and then it came down, again it went up, it came down, but this is the point. The actual trigger happened. From there on, it never reached this body's top. It just kept on rallying, right? So I would drag it to this point here, right? Now let's go and check what happened. Right? So now you see this is even more closer to this 0.5%. So market in general has a tendency to go as low as 61.8% of correction. But most likely people would try to reverse it at not at 23, but at least at 38%, there will be some sort of reversal. Then at 50%, there will be strong reversal. At 61.8%, there will be strong sense of reversal. Yeah. So that's how you draw the Fibonacci retracement. I know this is a lot, so let me just mute myself and then ask if you guys have any questions about how I drew these lines. Please feel free to ask. And because this is the first basic step, if you miss it, then it becomes very chaotic as we move forward. Okay, so wick depends on time frame, and then why you ignore. That's fantastic question. Yes, yes, the market is formed. It's a 1 hour candle. It's not even a 1 day candle. Okay, if it is 1 day candle having a wick, maybe I want to go to the lower time frame and check. It is already we are at 1 hour time frame, and here itself it got rejection. But where actually in the what happens is sometimes there is a great momentum and then it peaks. It suddenly out of panic, short covering happens, suddenly it jumped almost like from 200 it rallied about 300 points. Okay, like let's say the price was trading at 200, actual value what it should be was only about 350, but there could be a spike and then it might have reached 380, but it's not the actual value, right? It retraces back to what it is supposed to be, so it comes back. So these are some sort of spikes. We should ignore the spikes because that's not the real value. The real value is where the trade actually happened. When you see a body means here the buyers and sellers fought, and then they dragged it. Here there was no fighting, it was some stop loss hunt, right? The actual war happened here, not at the spikes, but actual body is where the battle actually happened. That's why we should ignore the wicks. Is that clear? Yes, Sugar.
Hello.
Sorry, who is that?
Hello.
Hello.
Good morning, Satishji. I'm Dabi.
Hi, Dabi.
Thank you so much for conducting this session.
Yeah.
And we are really thankful to you.
Yes.
I was driving and one of the person was helping me to hold the mobile, and I was in panic. Now I have reached my destination, and
Okay.
a little bit of last portion was left over.
Okay.
So can you quickly just repeat the steps to draw, and it will be of great help to me.
Okay.
Thank you so much.
Sure, I will do that. Just mute yourself. Okay, I will also take some other questions and then I will repeat this. So because price rejection, correct, Sugat, you're right. To trade on Monday, how would I mark my level for intraday level time frame? Actually, sure, we will be discussing that. That will be the end of the session. I'll be drawing it live for you all to understand how we arrive at these numbers. First, we need to understand the tool, and then I will show you how to draw these levels. Yeah, and trust me, it is such a confusing thing to do in a range bound market. It's very, very difficult to draw the levels on a range bound market. When it is trending, it's pretty much simple. When there is a fall, when there is a sharp rise, it's easy to draw. But when it stays within some 100 points range throughout the day, it's almost impossible to draw. But still, I have done that using my own techniques, which I will try to share. Okay. Would you be using a doji at the top and bottom? Makes sense then. See, I don't really want to say which candle it is. Even this could be a doji. But after the doji, was the fall continuous? Is the question. It should not. See, here also there is something. See, here also you had something. It fell down, but then it again came back to the same levels. And then, in fact, it crossed over this level. That's why I'm taking the last peak that it made before the fall. Till there I go. I hope that answers. Right. Okay. So Dabi, what I was saying is you need to start from right to left. And you need to go to the peak of the rally, like say that the market has taken a swing from here and then it reached the peak here. Now we cannot really use any indicators to see how much it can fall, and that's where Fibonacci retracement comes handy. And when you see such a rally happening, you should start from the right side. There are 2 points for a retracement. You should go to the right edge of it, drag it to the level till where you want to measure, and then this is the range. Now, when you do it, there are certain conditions that I was mentioning. Go to the last candle that introduced the point of reversal. This was in this scenario, in this time frame we are using is 1 hour. In this 1 hour time frame, the last reversal point is this red candle, after which the market started to take a reversal. So I go to the body of it, not to the wick of it. From the body, I am drawing and then extending it all the way back. Again, I would zoom out. Yeah. Then we have this last, again, there is some sort of, market coming down, going up, coming down, going up. And this is where the actual confirmation happened. From here, it rallied and it never broke this base of this level. The market never touched or went below this. So this I would consider as the base, right? And that point is here, right? So this is what I used to say in my voice recording. The market was at 32,000. And when was this? This was in June this year. Look at that. It was June this year, 2022. It's not even 6-7 months, and the market has rallied how many points? 12,000 points, right? It's a massive rally. So if it has gone so high, it has to come down, right? Because market is ebb and flow. So if it is ebb and flow, how much can I expect it to fall? And we have the first level, which is 23%. See, market just like that fell 23%. It did not even respect this 23%. In fact, it gave a gap down here saying that this is nothing. It just didn't even wait here and give any retracement. It just simply broke. That's why I ignore this 23% in a longer time frame. But for intraday purpose, I use this. Okay, I don't ignore this. For range-bound markets, this is really essential for us to have. Then it went down, and then here you see some sort of fight happening. Actually, when it reached, see the changeover. This is 38%. When it reached the 38%, what happened? It didn't keep a gap down and then went down. Instead, there were some sessions happening around this area. Like you see here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 hours of trading happening around that level. It is not like simply broken and then went down or anything. It just traded around that range. And then as low as it went to close to 0.5%, and then it started doing a reversal, right? So this is how you do a retracement. You draw a Fibonacci retracement. Is that clear, everyone? Okay, cool. So what we can do is, right now I'm going to delete this. Yeah, okay. I'm going to delete this Fibonacci retracement. Now it came down and then it came as low as 37,000 and then it rallied up. And then how much it rallied? Let's see. It rallied till here, right? Now I wanted to do the Fibonacci retracement again. So what I will do, I'll zoom in and go to the peak of it. Oh God, okay. I'll go to the peak of it. And you see, at this point, I can consider. So I will take this as the peak, because after this, the market went down and down and down. It never came back to the same level. Then till where I wanted to do the calculation, I want to bring it all the way. Let's say till here first I will draw, because this is where the rally happened. But is it right? Let's check it out. I'm ignoring the wick. I'm going here. It went up, then it came down, and then there was a gap, and this is where the real momentum starts. So I might even go and say that this is the place of reversal because it went and then came down. Look at the power at which it went. It went with a gap. Whenever you see a gap in drawing Fibonacci, you consider that as a long green candle. Okay, so I would consider this as the base of it. Then zoom in. See, it is not touching. So I would adjust and then make sure it touches. Now we have established the peak and base of things. Now let's go and check it. The market has reached the peak. And then what was the first level? 23%. No respect. You see, broke. 38% possible reversal. Yes, but still the candle was so sharp. That's why I was saying if it is closing below 41,600, that will be like here. And yeah, if it had closed here, then even 38 is not respected. Then where I can expect it to fall? It can go as low as 41,061, right? And if it further breaks, till where it can go? It can go to 40,300. So this is the short-term view. This is the short-term view I was talking about. It has reached a peak. It is falling down. And till where I can expect it to fall? The first level of target was this. It was taken out in no time. Second level is also taken out. And Monday, we have to see whether there is any reversal from here or it is going to continue to fall. If it is reaching here, then it is complete bearish indicator, then it should fall. And if it is not taking any reversal here, and then we should observe if it is trading below, and then it reaches, it has potential to reach here. So that's how you identify the short-term targets. Does it make sense? How do you find this tool so far? Please feel free to share. Okay, awesome. Thanks, Akhilesh. Thanks, Gopalakrishnan sir. All right. So, yeah, data may be saying, many things are there. You see that trending OI from OI Pulse, or you have your own way of interpreting data. You have some algo, everything, it's all fine. But then this is a very basic thing which has to be done at an elementary level to identify which level it can retrace to. That is the first step that you should have. Along with that, club all your setups. Now you want to add VWAP to this, add VWAP. You wanted to add any indicators that you want. Maybe you wanted to add pivot. You wanted to add let's say that you wanted to add what is that? Super train, maybe. Yeah, you want to add all this, you add all this, and then mix it with your setup. Mix it with your setup and then see whether it works or not, right? But for now, I would remove super trend, everything. Also, I will hide this. Yeah. So club this with your setup to find the actual levels till where it can fall. One. That is all about Fibonacci retracement tool. How to draw it, I have explained. Let's capture the learnings into the PPT now, right? You need to ignore the wick, then draw from the actual point of reversal on both sides and ignore the peaks. Yeah, the peaks means here here, this is the peak, right? The bottom, this is the bottom of all, but we are ignoring it because where actually it started here. So I am ignoring this and then starting from here. then enable 23%, 38%, 50%, and 61.8% for long-term and short-term views. 23% is only for certain things it will be useful. Mostly I will not use this even for a short-term view because this is easily can break and then move. From here on, this is very critical. These three are extremely important levels. So this has to be considered much more, this is considered to be much more appropriate than 23%. But I use 23% extensively for intraday purpose. 23% is mainly for intraday levels establishment. Yeah. So this is all about retracement tool. And now I'm going to introduce a second set of tool called the extension tool. Okay. So the extension tool is more of, using this data. I have identified the levels, but what is it for me? Where can I expect? From here, I don't know. Market has reached here, right? It has gone up, it has come down, but I don't know if it will reverse from here or it will continue to fall from here. So looking at the momentum of fall, what are my immediate targets? How do I find that? We use something called extension tool here. So that extension tool is, you go on the left side and then you see the second one, trend-based Fib extension. So this is the one you should take, right? Now, retracement has only 2 points, but extension will have 3 points. 3 points. How do I draw that? Let me show you. So this is the part where it all will start. It started from here. It reached the peak here. Then it reached here, right? So again, I wanted to do a zoom in. And then probably from here, my goodness, need to be very careful. Yeah, here. It started here. And another thing, you might be wondering, I said that it has to start from left to right and right. Why I'm starting from left to right here? It's because extension tool is very, very flexible. Retracement tool has to be very, clear. But extensions tool, you can use it this way. This will give you the peak of things. Like it started from here. It reached the peak here. So zoom into the maximum. See, we are missing out these things. This is where the accuracy will miss. So you need to just get to the right point, almost at the same point. Then where it went till here, right? Now I wanted to check what's happening. So what I wanted to do is, you see here, it reached 0, 23%. The immediate target is 43,128. Yeah, convert it to the nearest round number, like 85 means you convert it into 128, 43,128, then 44K, then 44,754, then 45,486, and so on, right? Why is it so huge? Can I trade with this data? Like market is right now at 41,666. Then I'm saying that 23% is 43,200. This is already like, it's recovering so much. Can I play an intraday with this? Absolutely not. But keeping this for a long-term view is important. Okay. It might not happen tomorrow, but if in case if it is reversing, till where it can go, you should have that clarity, right? So first level, it would reach 43,128, second level 44,029, and so on. Now, what I see here is I have drawn this extension, 38% recovery, and this Fibonacci retracement level, that peak that we draw, are almost close to each other, right? So what I would consider is the peak, 44,152 could be the high that it can reach. I will ignore this one and go with the much longer retracement target. So first level of target would be 43,128. Second target would be 44,152. Is that clear? Okay. Yeah, I'm going to. Okay, I missed a lot of questions here. So is this done in any time frame? Yes, depending upon the purpose. This is for long term. I am doing a study, so I will save this separately because I don't want all these lines coming up in my intraday setup. Right? These are too many lines that will come, and this is only the upside target now, right? And this is upside target. But then, can I use this to trade? I don't know. This is not to be relied yet because Monday I cannot expect it to reach 43,128 because 23% itself is so much. Now that is almost like how many points away? 1,500 points. Can I really keep that as an intraday target? Absolutely not. Even if there is a gap up of about 800 points, it will be only around here. And then whether there will be a reversal or not, it's useless, right? So one is a long-term or short-term view, and another one is an intraday view. So we are here to find about the intraday view, right? That's our main interest, right? So what we do is, okay, before I show that, any questions quickly, please? I'll check. Okay, no questions. Right. See, I'm new to trading wave, and I don't know how to use this magnetic tool for accuracy, and I don't want to really mess it up. So I will learn after this session. Yeah, you can see this magnet button, but then I really don't want to do it. Okay, let's get into the intraday thing. Suppose if I have to analyze what is going to happen on an intraday basis. Now, these are all like long-term things, right? Now, I don't want these things to come on my way. So what I do is I select this. Probably I want to analyze on the right side of the screen. So I move this as it is, just pressing the left arrow. It moves, right? So that is moved. Now I click this, then move it. Now there are no lines interfering on my right side of the screen, right? All my views are here. Like these are the levels, I am keeping it on the right side. Now, the FASP levels that I am sharing with you, how I draw it is this. Now, I want to find the upside targets. Now, how do I find that? There are different ways you can draw. One, I go to the recent swing low. I select this retracement tool. This is where the market reversed. See, it kept on falling. This is where it actually reversed. Then it went to a peak, and then it started falling down and reaching here. Right? Now I will zoom in to show you. So yes, this is the base of it, or maybe even I can take this. This is also fine. So there are no hard and fast rules. You want to take this, you take this. Then it reached here. I'm just going with the body of it. Zoom in and check. Slightly I can lower it. Yeah, this is perfect. Then from there, it reached the bottom of here, right? So my first level of targets for intraday would be, you see, 41,777, 41, 849, 847, and so on. Now, let it be. But how do I know this is reliable? How do I know this is reliable? One other thing I can also do is, I can take one more time frame. See, this was one time frame that I have considered, and then there was a fall. Now, if you see here, there was a reversal at this point also. So I do the same thing with the same reference point, starting from here, going to a peak of here, and then I go here. This is only for me to confirm myself. I know this could be very confusing. There are too many lines around here. Let me give it a blue and just say, yeah. Now, this is why I am doing this. I wanted to be absolutely sure. Although it's confusing, it's time taking, but I wanted to be absolutely sure because I want to protect my capital. I cannot really draw, lines approximately and then suffer. Maybe I expect a reversal at some point. I initiate position, but it's not reversing. It's continuing to rally. I want to avoid all those things. So I am going to the one more recent swing. So two swings I'm considering. You see here, one, it started. This is like last week or something like that. It rallied and then it came down. This is just very recently, when 22nd. So both the swings I'm considering just to improve my accuracy levels. Yeah. And I zoom in to see what happened. Here, this body is not touching. Yeah, right now, this is all perfect. Now, market is at 41,666, right? Now, how do I establish the levels? You see, it's going to be sickening to see all these levels coming out. Now, if I bring this on this side of the bow, this side, then if I bring this side, right, there are so many values here, so clustered. Now, what I do is, to simplify things, what I do is, I also include this pivots traditional, right? This one I add this also. Now I zoom in. Okay, market is here. We see there is a first level of support. This is yesterday's support, right? At 445. And this is 450. Looks like a very good reversal point, but it's only like 23%, and then it is a support level. It's not pivot. Probably I would give it a blue line, just a blue line around this level. I will give it a blue, right? I know this is a reversal point, but it's not as important as a 38% level. So I give it a blue. Then maybe, yeah. Oh, sorry. Be careful of touching those lines. It can move. Yeah. So this is my T1. Now I also process this thick one. You see, that's the long-term trend. It's so thick, right? This is the long-term trend. And is it coinciding with something else? What is also coming close to this is 777, and then there is this one 486. Sorry, 786, right? Then there is a 802. Now this is long-term 23%. This is short-term 38%. For me, what is most logical is we have already drawn at 750 level. Adding 30 points doesn't make sense. And this is to be considered much more higher weightage I would give to this, because this is 38% in shorter time frame, is much more powerful for an intraday setup than a long-term 23%. Does it make sense? So these are my priorities. That's why I make decisions and then I give. So this one I will give a strong reversal point. I use this, and then if I see that this is a strong reversal point, then I also give a very thick one to establish my levels. So this is T1, this is T2. Is that clear? Yeah, I'm using extension tool. Not just the extension tool. Okay, you might want to, okay, let's wait for a moment. I will clarify. Now, I have to use FASP retracement, start from the lowest point, go back. I mean, there are, you will be seeing so many lines. That's why, because one is from the past, long-term trend, another one is a short-term trend. It's all going to be like literally too difficult to process. But I am used to doing it, so I can do it quickly. So this is one retracement level. Then this I wanted to move it to the right side because this is a short-term view, right? So I move it to the last extreme. Then I also wanted to use for another level. From here, it went to, wait a second, it goes to, yeah, till here, right? And then I zoom in and check. Yeah, from here till the peak here. So it's drawn correctly. Now, this again, I wanted to move to the right side, right? Now, this one, if I have to move, I move it to the right side because these two are from short-term views. Left side is the long-term view. Now, this could be really overwhelming, but I'll break it down for you guys. So Fibonacci retracement I have done, Fibonacci extension tool I have put in. Now I'm going to zoom in. I have also enabled pivot, support and resistance levels I have drawn. Now I'm going one level by one level. I'm starting from the downside, going up. So I consider this because for two reasons. One, this was yesterday's support. Plus, around the same level, you have a long-term view of this one. And from here to here, there is about close to good 90 points. And that's a good level of resistance that you can expect, but it's not going to be a very strong resistance. So that's why I'm giving a blue line. What will gain my confidence is if there is a point where more than 2 or 3 overlaps are happening, that's going to take most of my attention. For example, look at this point, 50. Look at this point here, 41,845. Here, from the past also 41,846, and then 41,823, only 20 points away. So these three are almost like, together. And then I would rather go to the highest extreme and take 41,847 as my next level of target. So this would become my T3, and this I would give a very strong one because so many areas are coming together, converging here. So I would give it a strong reversal point. So you have level 1 here, T2 here, T3 here, right? Then I go, this is the most important part for me because you see 618, the golden ratio, right? And it is overlapping with 23%. And it is absolutely close to this 0.5 of the long term as well. So I would, so between this, what I would do is I would take this 0.5 from the long term as, because this is only 13 points away, I would go and draw this as my next level of reversal. And this will become my strong again. 0.5 is strong. See, the 0.5 level of this is very strong because there are many things in, converging. Here also it is very important because a lot of things are converging. So I'm choosing the levels based on that. So T1, T2, T3, T4, all these things. Then what do we have here? Just let's put things in perspective. The 3 levels drawn. Now, yeah, I would say when you have 2 numbers close to each other, take the higher one. So this one would be my, and why higher one? You see, this is 78% and this is 618. 618 is far more superior reversal points. So I would take this as another strong reversal point. Then, wow, look at this. 1, 2, 3 time frames are no 3 levels are intersecting here, and I would take the highest level. Oh, this is 1. 1 is superior than this, so I would take this level. So this is how I draw the levels. On the upside, we have been doing. Now you see here there is a significant merger happening. So this would be my next level of target. So you have what? T1, T2, T3, T4, T5, T6, T7. Good enough for intraday? Is this clear? See, what will happen tomorrow we will discuss. Okay, I want you to understand how to draw these levels, because that's making you fully skilled. Then whether the rally will continue down or whether it will reverse, nobody can say, but still we can make some sort of working around that. We can work around that and then see how to get some trade set up for tomorrow. Extension tool to be drawn from left to right. Yes, you can draw. Okay, as a general rule, use from left to right. Extension tool. Okay, but retracement tool has to be always from right to left. Yeah. Perfect. So could be very confusing, right? To see so many lines. That's why it takes so much time for me to draw on a daily basis. Okay. Now what I do is, this is something I will do for you guys now. Live, how I am sharing it with you, I will show that, because I have something called Fib intraday. This is the thing I share with you. So first thing is, quickly I update my targets. On the upside, this is what is that? Sorry, come again. Oh. So T1, T2, T3, all these are here. Now, one thing I wanted to do is, now the market has fallen so bad, you should select all these things now. Yeah, then I'm going to just drag it down all the way. Yeah, just drag it down. Oh, sorry. So I just wanted to simply drag it down because these are the lower side targets. And of course, market has already fallen. This should go down, right? So I'm just moving it so that when I update these levels, it should have some space, right? So I'm just going to move all these down. Okay. So let's update from the top. I'm going to just check if there are any questions. Please draw for a stock too. Shilpa, I will try that, but right now this we will stick with Bank Nifty. First, let me complete one analysis. So I go here. What was the first T1 that I said? It is 41,747. 41,747. No, 750, because this is the one we are taking. 41,750 will be my T1. So double click this line and then go to this coordinates 41,750. Then give, okay. Yeah, it has gone here, right? Then T2, where is the level? T2 is at 41,803. 41,803. 41,803 updated. Then T3. What happened to that? Where were the levels gone? I mean, oh my God, what happened to the levels? Okay. Thank God. I was literally worried where it all went. Okay. Because so much of effort, if it is gone, really I have to redo it. So level 1 done, level 2 done, level 3 is 847. I would take it round number 847. So 41,847. Then next level that we have drawn is 41,903. Then next level that I have to do is here 41,959. 41,959. Then the next level is here 4226. 4226. Or wait, 4226. No. Yeah, 4226. I would take that. Then the next one is here 42,141. 42,141. 42,141. Then the next level is here. So that is 42,246. 42,246. So you have all 7 targets on the upside, but this is not done. additional targets you wanted, right? So additional targets, what we have to see is quickly see there is a support here, there is a 0.38, there is another one confluencing here. So much of consolidation is happening around this. I really don't want to take the lower one. I don't want to take the higher one. I want to go where it is all confluencing. So 42.413 would be the point. I would go here because this is the support zone I am going to consider. Here I am considering support. Reason is there are many things, but I cannot really take this or I cannot take this also. So what is in between that is more reliable? It's a support zone from the past. So 42.413 would be my upside target. 42. Is my first target. Second target, where I can expect, wow, look at this. How many mergers are happening here? So what is that? 42.604. 42.604. So strongest resistance there, 42.604. You will find terrific attack from the bears. Then, is there anything else? Here there is a lot of mixing up happening. So there is a support, there is 0.618. I'm going to consider 0.618 always. 42.830. 42.830 is my next target. Right. Now, this is not all. We saw this. We have to check. This is a first level of resistance. That's okay. This is a lot of confluencing happening. This is a lot of confluencing happening. And this is maximum resistance. Then 42,000, I think there was maximum resistance as well. Yes, that is going to be red. 42,000 is going to be red. Yeah. Then 42.141. Is there any sort of, 42.141? Let's go. Yeah, there is, but it's fine. Oh, this is also a very strong one. Yeah, I need to put it red. It's not just a small thing. It's too many areas coming together. So this is how we establish. Now I just keep this. This is some sort of, I don't know how many finds this useful, but I like it. So I just simply keep. So this is my first set of work done. Downside done, sorry, upside done. Now just delete all these turtles. And another thing is, when market opens, I don't want these levels to be already crossed. So another thing that I do is I select all these levels that we have just drawn. And then keep it to the time frame 9:15. So just move it to the right. So when market opens, the fresh candles will be lying on this. It will be easy for us to trade. So it becomes very, very easy. So this is something we have to do every day. And right, okay. So this is done. Okay, I keep this. Now we are going to draw for the downside. Please excuse. I know we have short the time already. Yeah. All right. Any questions? Are you guys clear so far? Is it clear? Awesome. Yeah, Rohit, it takes a lot of time to get up to the speed and really head breaking, right? Now, the funny part is, now to draw the downside, you have to delete all these things. It feels so much pain to draw such a work and then to delete it every day, because these lines will interfere with our work. So we need to delete it. So all the lines that we have done so far is gone. What was this? This was that level that we drew. Right. Now let's find the downside target. Downside target for this sort of market is very easy to draw, because you had a very clear fall. There is no retracement, nothing. It kept on falling, right? There is a gap, there is a small retracement, but then there is a continuous fall. So whichever is the trend, that side, finding the targets is very, very easy. Okay. So what we have to consider here, just zoom. I mean, I will hide this as well. Unnecessarily, this pivot is interfering. Yeah. So market has rallied, no questions about that. It has reached the peak, but there is no data above this, because this is the peak. There are no further data above. So it becomes very easy. So I can consider this as one peak, this as another peak, and probably this as third peak, right? Now, what I do is, for retracement, if I have to use retracement tool here, if I draw, it is going to show me only the upside target, right? And that we have already drawn, right? So I don't want this. I wanted to find the downside target. So if at all I am hell-bent on using retracement tool to find it, yes, we have to break the rule and use it from the left side to the right side. Okay. I wouldn't advise, because I know when to use and when to break the rule, because I'm so much used to it doing now. What happens is, you see, I go here, then it goes all the way till here. Yes, the market has fallen. It has reached 23%, 38%, and then it made 1% here. Now, what is that further it can fall? I am having these levels established. Okay, these are long term. So moving it to the right extreme and keeping it aside. So one level is here. Now I wanted to find the same from this peak. So I draw from here till here. Now, whether we have drawn it correctly, let's zoom in and check. Yes, this is correct. And this is also correct. Now, for this level, again, we got some lines. Now, again, move this to the right extreme and then don't overlap it. Keep it closer so that you are able to differentiate. This was the first one that we draw. This was the second one that we draw. So it's on the right side now. Now, the actual way to find the downtrend, we are going to draw now. That is extension tool. What happened here? We have to find the last swing low, last swing high, and sorry. One second. Yeah, we have to find the last high, low, and high. It gives you some targets, right? So this is one. This is from here till here and here. So these sessions are not even considered, right? So maybe it might not be accurate, but I don't want to really ignore this. Still, I move this and keep it as on this side. I want to see if there are any overlaps. Now, okay. Now this is where the sickening part comes. I have to find a peak, but the market has rallied single direction. See here, it came down and then it rallied up and then it started falling. So this level got easy to pick. But then if you look here, it kept on falling. There was no increase, right? So here is what I do. This is all my own rules that I created. So under such situation, I would consider this as the peak. Okay, this as the peak. And it reached, I am including the tail. Okay, and I will just place this. Now what I have done here is I am going to the peak of it. Okay, on an intraday basis, and it reached a low at this point, and then it reached a peak here. So this is something for intraday purpose. I'm breaking certain rules. Okay, generally I don't do that, but then since this is continuous falling market with no recovery, I have to do this to establish and improve my odds. So again, I am going to push all this to the right side. Now I have done all the analysis from all the recent swings. From here I have done one, from here I have done one, then from here I have drawn retracement, then from here I have drawn retracement. So both extension and retracement for both the points have been done. Now I have so many lines on the side, which could be very confusing. It could be really overwhelming. Now what I do is I want to include pivots and supports, right? Now let's go here. Okay, we have one that's saying 553. Okay, so there are no other indicators that can say this 553, and I'm getting this because I have taken a very strange consideration. Otherwise, you will not normally get this one. This level I got it because I took some sort of violation. I got this one. It's important. Otherwise, straight away I'm getting at 41,480. Now the market is at 666. 480 is too long. I will not have anything in between. So this acts as a very good indicator for me. I don't care which level gave me this line. I don't really want to track that. But all I am happy is that something came in between 100 points. That's very important for me. Otherwise, 41,666. And then the next one is at 41,470, 200 points. Why do I want to miss out something in between, right? So this is a great indicator. But I will not give it strong reversal. It is only one indicator, so I will give it a blue. Okay, very small one. Is there anything that's playing out? You see, support level is here at 448, and then this is at 479. I would rather consider this as my second target because the support is always superior than 23%. If it is 0.38%, I would have taken this. If it is 23%, the nearest one is support, then I'm going with support. Okay, so this will be my T2, but still, again, this is not a strong reversal point. I'm not seeing any sort of overlap happening, right? Then here I see downside targets are just very, very distinct. You're reading for every 100 levels, there is something happening. So 0.38 is little stronger. So I would give it a, I'll give it this strong reversal. Wait, this one, sorry. Yeah, this one. And then 1% is also very important because 1 is a complete number, right? So I take this also. That's a good one. Then 0.5. Yeah, 0.5 should be taken, correct, because 0.5 is a very important one. But this is all, this one, so I am taking it in strong reversal point. 0.5, I am not seeing any sort of confluence, so I am taking it a mild reversal point. Oh, 1 second. Yeah, this is a mild reversal. Where is the maximum thing happening? Here. You see, this point is 0.618 and it is a support zone, and both are very critical. Here it's going to be a bit of a challenge, which one to pick. So if I ask, which one would you pick? Would you pick 41,077 from the support or 618? Which one would you pick? Hmm, 618. Yeah, okay. Right. 618. You should go with 618. Okay, because 618 is very, very important number. So I am sticking with that. And it's a confluence point. So I am going to keep it in this color. Then 41,983, 41,922, then 800. No, this is too much of a gap. I would take this because there is nothing in between to support us. So I would take this, but I will give it a blue because I need, for every 100 points, I need something to know there is some sort of action happening. But without marking it, and then you suddenly find something reversal or something going drastically down. For 200 points, if you don't have any control, then your trade setup is, going to be messy. So I wanted something for every 100 points at least, right? So 922, 879. Of course, I would go for 879 because you don't need such close range reversals. 78% should be just ignored on most cases, just like 23%. 78 also should be ignored on many cases, because once it crosses 618, then almost everything will reach 1%. So you need around that level. So I am keeping it here. Now, how many targets we have? I think we drawn too many. So 1, 2, 3, 4, 5, 6, 7. Yeah, we have more. So I'm going to delete all these things just to make sure that we are picking up the right ones. All right. Then I'm going to hide this. So we are left with the lines T1, T2, T3. All these things we are left with. So first is T1 at 41,552 on the downside. 41. Okay, T1 drawn. It's not a strong one. It's just something to keep in mind. 41,447. 41,447. T2. Then 41,332. Then, so I will just delete whatever I have drawn already. Here, 332 is done. The next one is 270, 41,270. T4, 41,270. Then this is some strange line. I'm going to delete it. T2 is all done. T3 is done. T4 is done. So T5, what is that? 270 is done. Oh, 270 is a stronger one, right? So I need to keep it blue. I mean, this one is correct. So if you observe in this one, we didn't get any red one, meaning there is no strong support at this level. Till now, there is no strong support. Yes, there are not too many confluences happening at the bottom side, which means there is more bearish momentum at the downside, right? Yes, these are going to be strong reversal points, But on the upside, you saw some strong red lines that we are not getting on the downside. You see that? So 42, 41, 270 is done. 41, 213, I'm going to take. 41, 213, and this is going to be blue line or green, rather. I use green on the bottom side. Yeah. Then T6. Yeah, this is some strong point. 41.91. 41.91. Then I use this 49.82. 49.82. Yeah, 7 levels are good enough. Now all the additional things we can put it in here. Now I need to bring it here, and here. So just select all and then move it to the right to see if it is exactly. Yeah, okay. Yeah, this is fine. On the downside, what are the targets left now? 982 we have used it, right? 982 we have used. Okay. 880, 708. 880 and 708. Then are there any further levels in the downside? No, I don't have. I didn't draw, so it's enough. This is enough, good enough. Because further, if it falls, then it's obviously going to break every level and then go further. So we are good enough with these numbers. Now, this is how we have the levels established. Now, I will just put this for the strong reversal points alone. Here is one. Then some visually something to keep in mind, that's all. And then here is another reversal point, which would be at, yeah, these levels. Now this is done, but this is all in my analysis tab, right? Now I need to bring it to my trading. So I use something called a study called intraday. So for which what I need to do, just drag, let all the things be visually visible, then select all these levels, and I'm going to do Control C and then go to my intraday chart. Yeah, intraday chart, and then remove all these things, just delete. Because this is my trade setup. So in my trade setup, I want only the levels to be there. I don't want anything else to interfere. So I'm just going to delete all these lines. The previous day targets, I'm just simply deleting because it's double work for me to type the coordinates. So now we have everything, and all I do is Control V now. Every level is mapped and it is all aligned for 9:15. Yeah, 9:15 trade time, it is aligned. Yeah, this one I need to align. Now I save this and yeah, I will publish this in some time, but yeah, saved. So everything is done. That's how we do the levels and map it. Now the straight levels are there, we can expect. So when market opens, based on which level it opens, suppose if it is opening at this, we can expect some sort of reversal at this point. If it is opening here, then yes. Suppose if it breaks here, T5, then I will wait for the first 15 minutes. And if it is continuously going down from this level, then I would take a PE position. Even though it is risky, I would take, because I can target till here, 49.82. So my opening trade will be based on where it opens actually. If it is opening comfortably, say here, I would see the sentiment. Suppose if it is opening with a gap up and then going here, I would take a contra position comfortably, because T2 and T3, there are two resistance points which you have identified. Plus, see that I have a 9 EMA, VWAP, 20 EMA, VWAP, 9 EMA, all would be around this age here. And then there is also resistance points. Then there will also be a support points that would be coming. And there will be a huge resistance points. At that time, in the opening, I see the green candle opening here. I immediately take 2 lots or 3 lots, and then it starts falling and then it keeps coming down. I trail the stop loss and pick it up. That's how I do my morning trade. So hope that helps. Yeah. Yes, I am using spot chart because all my analysis is based on spot. I don't want the futures to interplay, because futures the contracts are going to expire, and then something that you wanted to have for the long time frame, I may not get data. For example, 2 years or 5 years data, I wanted to go back and then check something. I don't want the contract thing that expires to be the decider, because sometimes it could be on premium, sometimes it could be on discount, and there will be some 30 points, 40 points, but it will make a lot of difference. That's why. So how do you interpret the volumes? Honestly speaking, I just will see only one thing. If the candle is, see here, here there is a green candle, here there is a green candle, the next one there was a red, and the red was not even, see, it's not even as leveled as this one, but then you look at the fall. What does it indicate? With a small volume of selling, the price is coming drastically. With so much of buying, the price is not moving higher. Here also you see bigger candle than all, but then look at the move. It's here showing bears are exhausting all the bulls. Whatever that they are, selling, the bears are selling, the puts are being purchased continuously. So that's how I see it. And look at this, such a big volume, but no movement. Smaller than that, but look at the drag. So that's how I read the data. Yeah. So Dinesh, do I open, take the trade directly or wait for first 15 minutes? If I am seeing something at purple, I go immediately. Okay. For example, I see a gap. What is happening here? Okay. Yeah, I see a gap up. For example, from 41,600, it is opening at 44,750. I will definitely wait for the first 15 minutes candle, because if it falls from here, it will be a quicker fall, but I don't know what would be the potential of it. But if I will have more conviction, because it might, I might buy here, put I might initiate here, but then From here, if it is climbing up another 100 points, I would have already lost some 50 points in my premium. So I have to take a double trade to average. And then suppose it breaks and then goes higher, I have to take 4 times the quantity. First trade, if I have taken 50 here, I need to take 100 here to bring the average down. And then if it is going here, I need to take 200 to take the average down. Why take such a mess and then create difficulty for myself? I know at this range, there is a purple one. At this range, there is a purple one. And then there are 3 strong reds. Why do I need to take here? If I am seeing it opening here, definitely I would take 50. And then if it goes here, then I would 100. If it goes here, definitely I would go aggressive. If it goes here, I will just go full throttle. And then as the level keeps improving, we need to just add more and more trades. Definitely it is going to be rewarding. Unless otherwise it's crossing certain threshold level for which I should be prepared and then exit. So I cannot mindlessly go on averaging, right? Suppose there is a complete reversal, then I will lose very big money. That's why I play in next month expiry, where even though there is an 100-point move, I would hardly lose some 20 points because time is there. You don't have to, even if the fall is faster, you will not get more straight away. You will get only about, for a 100-point move, you might get about 30 points or something. But in current expiry, if something is trading at 400 and if it has increased 100 points, then you would lose somewhere around 50 points because it's current expiry. For every 100 points, I am losing 50 points. But in next month expiry, I'm losing only about 30 points, 35 points. That's okay with me, right? What will be your stop loss? Yeah, I think that is something we have to define. My trade, my capital is different. My setup is different, and probably I'm okay to lose even 20K, 30K also because I have the conviction I can make it. Okay, but if you don't define it, what happens is we freeze. Suddenly we freeze, and then we don't really have any sort of control. So what I do is I take a position. I don't put, honestly speaking, I don't put any predefined stop loss. My quantity is such that even if it moves 100 points, I'm going to lose 5,000, right? My first trade is going to be 50 quantity or 100 quantity. Even if it moves up by 100 points or say 200 points, in the next month expiry, I would hardly lose about, say, 70 points. 70 points into 100. And then I would wait. I would really wait because if something, a large green candle is coming, I have taken a PE position here, large green candle is coming, this is not respecting, it's going here, I will just freeze. I will not do any averaging. I'll just wait. Probably here, I might not double my quantity. I would only go another 100 quantity. And then I know this is another strong point and it is also 42,000, 138. Here, there should be some sort of intraday retracement because from here, the market has rallied. You know the retracement thing. It has to come to 23%, 38%, 50%. I'll do an intraday Fibonacci chart, then see till where it can fall, and then use that as my exit. And I don't place any sort of stop loss. I know a lot of people would be like not okay with that because I would rather accept my strategy. My stop loss would be like, let me take the real loss. That's okay. But I don't want to put a stop loss because there are a lot of fake moves happening. Every double side, your stop loss will be hit and then you lose. But what happens is on 10 occasions in markets like this, 9 occasions your stop loss will be hit. One time it may not hit and you'll only be able to recover the losses that you made in stop loss hitting from last 9 sessions. Rather, I'm willing to pay one bad trade, say about 20,000 rupees, but then capture all the other trades at my own comfort. I'm willing to lose that capital of the premium paid. So what is my premium? Something I am purchasing at 500, it is trading at 500. I'm taking 100 quantities, 50,000. Other two next month expiry, 70 points I lose, 100 points I lose. What, 10,000 rupees, right? That's fine. So my stop loss is not actually placed into the system. I don't place the stop loss, Once I am entering into profit, I trial the stop loss and then exit. So that's my thing, because I play in next month expiry. I don't have to really worry about my thing. When I buy, I don't put stop loss because I know my risk is already limited to the premium. And what am I here to protect? Anyway, I'm a writer. I'm getting premium from writing position. So this is only for fun. I am doing some sort of intraday. That there I am willing to lose. Yeah. I trade in monthly expiry, not in one. See, in 1 month, so much can happen. Market could have moved 2,000 points down and recovered 3,000 points also. In 1 month, a lot of possibilities. So why to take something in next month contract and then force myself, pressurize myself into averaging and lose my capital, right? All I wanted is, okay, my capital is X. I want 10% of X or 5% of X. And if I'm getting it in this month, expiry or next month expiry, how does it matter? It's more about feeling relaxed. And when you're relaxed, you will be able to enjoy the market, analyze the market. If I'm like, in negative trade and only 10 days left for expiry, oh my God, 10 days only left, it should go up. Why should I force market to work the way that I have taken position? Right? Rather enjoy the trade and then analyze, oh, what is happening? Fibonacci retracement, is it possible here? You can enjoy the trade analyzing during the live session. So that's why I play month-end expiry so that I can keep myself calm and enjoy the writing position as well as the intraday position. Yeah. So any questions, guys? Was it useful? Please do share your feedback. Any questions you have at this point? Yeah, let me know.
Satishji,
Yeah.
thank you so much. Thank you so much. Very nice session. And we are really gaining so much from your session and your post also. Only thing, I requested one small brief review steps for drawing lower targets. Briefly, step by step. And then we will learn by practicing.
Okay. So if you want to know how to draw the lower time frame, is it? Lower time frame
Yeah,
or downside targets?
Not lower time frame, downside targets. Intraday downside targets.
Okay.
Briefly, we have understood broad concept. So we will do little more practice, and then only we will gain some experience.
Okay. So I get that.
Thank you so much.
So this was the last swing high. I go here, use this retracement tool. See, always draw from left to right, but I want to find the downside target, which will come only if I draw from top to bottom. So left to right. So for downside, I am using this. So I go here to the peak, just adjust it and then ensure it is here. Yeah, it is here. Then on the downside, it's here. So one level of target, see one thing is established. Now go to the second one. You want to find from this level. Just draw the second thing from here. Go all the way. No, wait, this one has to be adjusted. Yeah, from here. Then drag it till the same point you have here. So this is also done. Now, these are two targets. Okay. Now I wanted to move this to the left side. Then this also I am moving it to the left side. Wait, I'll keep it here so that the values are next to next. I can see. Now I wanted to use the Fibonacci extension tool to find the downside targets. So for downside targets, we have to have a V format. So is there any V format formed? For example, if I had drawn from here to here, And here I get easily the downside targets. You can see here, downside targets. It has to make a V format. It should have fallen, it should have risen, and then we can see what are the downside targets. But unfortunately, the last trading session, there is only a fall. There is no recovery. The only place where it has recovered was it fell here and then it came. So that was the only V shape that I see, right? That's why I'm going to this point and drawing it till here and then extending it till here. Now I got some downside targets, right? But I'm not sure if this would work because this was already like 20-second data. But yesterday there was another 800 points fall. Where will I get this, right? So in order to improve my odds, what I do is I would consider drawing from the peak of yesterday, go to the wick. Never use the wick, but I'm using it here because there is no other option to find. So I start from here, then go all the way to the wick. It touches correctly, and then to the peak. Now this is done. Now you have two more data. Instead of just one, we have two more data. Now I'm going to push this to the left. Now let's see the confluence where things are fall. So the market has ended here. Let's go one step at a time and then see 41,554. Anyone got what was our level we defined? Is that correct? 41,554. Yeah, almost approximately, because there could be some small up and move down. That is fine. 41,552. Okay. Then 41,465. And why we are not taking 465 here? Because we have to add this pivot. And now you see 41,449 is here. Right? Is it clear why we are ignoring this and going? Because this is only 23%. I have a support in 1 hour time frame. That is massive. So I would like to use this data. Right? So another way of drawing this would be, let's say I go to 15 minutes time frame. We might find some V pattern. Yeah, here, if I take it from here, it fell all the way here, then it made up, and this can be used. So that's all that you can try in different time frame. You can try and draw. Usually 15 minutes and 1 hour for intraday is good. Okay, so the time frame is 15 minutes and 1 hour for intraday. For long-term study, use 1 hour and 1 day. Okay, this is the time frame. Yeah, let's check. Okay, thanks. Yeah, okay. Right, thanks everyone. Any questions on this? I'll stop sharing. So just quickly, if you find the session useful, do let me know in the chat. Or maybe if you want to say, you can unmute yourself and share. Both are good. Chilba, for stocks, what I would suggest is you try doing this for one of the stocks and then share the results with us in the group. I will validate it because I wanted to really go and have my breakfast. I haven't taken my breakfast yet. Please share PPT on. Okay, sure, Dabi. I will try my best. I will share that with you. Yeah, I will share it in the group. Yeah. Yeah. So, yeah, surely an informative session. Thanks. Yeah. Thanks for the feedback. I'm glad you all found it useful. Try drawing it. It's going to take some time. And now you understand why it takes so much time to draw this, because we have to consider many different factors. It looks like, very simple, draw from here to here and then draw, put some pivot and then find the levels. Not so easy. It can be very confusing, and then you will have to map it back and then validate. So that's very important. It's going to take a while before you catch up with that. But I'm sure you all have that great acumen to pick these concepts and then quickly adapt. So try it out and then see the levels for yourself. The biggest challenge for you would be to draw on a non-trending day where it is stuck at only about 100 points. Drawing the levels is extremely difficult. Okay, so take those challenges, try it out and see how it works. And I'll be there on Telegram channel to answer any further questions. So that's it. And if there are no questions, there are no feedbacks, then we can call it a day. Thanks, Amal. Appreciate your time and effort. Thanks, Kane. Thank you, Satish. We are grateful. Thanks, Dinesh. Thank you so much. So get ready, guys. I'm going to publish these levels now on TradingView. Map it to your charts and then go for the kill. Okay, let's really go for the kill on Monday. Yeah, just club these levels with your trade setup. If you are using VWAP or Shiva's setup, whatever you are using your own setup, completely fine. Just mix these levels and then see the results. It will be independently, you don't take the positions. You club it with your trade setup, and it adds more winning chances. Yeah. All right. Thanks, Gopalakrishnan sir, and Dinesh, everyone. So shall I call it a day then? If you guys have something to say, you can unmute now. Absolutely fine. Or you can just call it a day. Right. Yeah, thanks, Shilpa. Yeah, thanks, Inder. So really looking forward to see you all on Monday with good note. All the best for your trades, and let's catch up on Monday with good results. Yeah. So take care, everyone. See you. I'm going to end this call now. Thanks all.